some cycles you may see the stock price correcting, but by and large it's still on a fabulous upswing.
All right, let's get some more questions in. You have another question. Go ahead.
I wanted to know about the economy as such. In case if there is a point in time when the government wants to actually bring in, FDI in aviation, basically increasing the percentage of FDI, media, and any of these sectors. At that point in time, what should one do in as far as investing is concerned? I mean, should we look at those kind of sectors? Do you think there will be an upswing in terms of share prices going up in those sectors?
The sentiment is driven by what the government wants. And sentiment is a very important thing in the stock market because, if the sentiment is good and stock prices tend to move up. And that has got some correlation with the economy also. But by and large, I think, these are headline news, which I think the investor can best avoid. So if you read that there's FDI in aviation, FDI in retail, by the time you as an investor come to know a stock price will already run up. So Pantaloon or maybe a Spicejet or Kingfisher already run up, so it doesn't make sense chasing those stocks. As a general rule, you should try and, first of all, if you're a new investor, maybe go to a mutual fund. So if you try and do it by yourself, then try and buy the large companies which have got very large market capitalization and which have a representation or other representative of the economy. For example, banks is a good place to start with because everybody uses banks. Banks are very large companies and they do well when the economy does well and they do badly when the economy does badly. So if you believe in the Indian economy, the best place to start is the banks. Next is all these fast-moving consumer goods companies that maybe Hindustan Unilever or ITC or Colgate or nowadays they are Marico or even Dabur, because these are items of mass consumption, and despite the ups and downs, people generally tend to consume all these various products. That could be a good kind of industry to be invested in. But a good way to go about is not look at immediate headlines, but look at the larger picture that banks will do well if Indian economy does well. Even if the economy doesn't do as well as you thought it would, the companies which make food products and cosmetics and toiletries, they will continue to do well, so you could invest in them. And because you know that India, the rupee has been falling, then technology companies also tend to do well. Then allocate it more or less equally to these sectors and then look at the best companies in the sector and invest in. It's a good fun to start, getting yourself, in sync with investing in the stock market, and then let's see how it goes,
So the important point that Bipin has mentioned over here to keep in mind is that, to remember, whether you're a long-term investor or a trader, never confuse the two. But we need to take a very quick break at this point. We'll be back.